Well, this is one of my big nights. Thank you to the crowd who is in attendance. So this is our required truth and taxation hearing for the 22 pay 23 levy. And just a reminder what that means is it's certified in the calendar year 2022, and then the taxes are paid in 2023. So we have two requirements for our truth and taxation hearing: to discuss our current district budget, and then obviously to discuss the proposed levy, or what now will be the final levy. So we've obviously already talked about this year's preliminary budget at the back in June when it was approved. And so there's really nothing much new to say other than just a reminder to people kind of where does our revenue come from. And I think some people are a little surprised to see that our local levy is actually only 11% of our total revenue. The vast majority of our revenue comes from the state aids, and the vast majority of that is per pupil amounts, whether it be the basic formula or many of the other formulas are a per pupil amount. We are getting about 9% this year anticipated from the federal government. That's a little bit higher than usual, primarily because of some of the COVID funds that we have now through the fiscal year 24 to finish using those. And then other miscellaneous, and that's things like our participation fees, when you go to a football game and you pay, those sorts of things are our miscellaneous revenue. And then when you look at our expenditures, oh, by the way, this play was so amazing. I always try and, I go on our Facebook page and I find recent photos, but that was, so some of our expenditures went to put on this amazing play. The vast majority of our expenditures are in salaries and benefits. At our heart, we are a service organization. We're serving our students in our community. And like most service organizations, most of your expenditures are going to come in the form of salaries and benefits. The second biggest pot is purchase services. Probably the two largest line items in there would be transportation and utilities. So things that we don't really have a lot of control over. Supplies and materials, relatively small piece of the pie, capital expenditures, and other. So when districts are in the unfortunate position of having to make reductions, you can see that we've got some almost fixed overhead in our purchase services, and then there's just not a lot of other areas outside of wages and benefits. So, fortunately, we are not in that situation, but you can understand by looking at this of why districts eventually have to go to that very large piece of this pie. So factors that will impact our revised budget, and I plan to bring a revised budget to the board in March. Our enrollment, so currently our enrollment is higher than what we projected when we approved our preliminary budget in June. We do know, however, that from our October 1 count, which is kind of the first official count of the school year, until our end of year count, we do tend to lose students. And so I have a formula that I use several past years of how many students did we lose from October to the end of the year, and I apply an average. And so I'll be doing that here in the very near future, kind of looking at our October 1 count, where we would anticipate that would be the year end, and then deciding, do we need to adjust the ADMs that we were projecting for the preliminary budget. And then the other thing, we do still have a couple of big pots of money for our COVID-related grants, and we are doing some really great things with this money. I'm really excited and hope that you guys will have an opportunity to understand some of the things that are going on in our after-school programs. These were funds dedicated to after-school or summer programs, and Scott Hanna on our community ed team is just really doing some exciting things for our students. So hopefully we'll have an opportunity to hear from him. So now getting to the actual levy, we've talked a little bit about our budget. As you probably remember, we have three main areas of the levy: the general fund, the community service fund, and the debt service fund. So a portion of the general fund levy is broken out over what's called the referendum market value. And this is where we take all of the properties with value and we divide them in a prorated manner. But this means that all of the properties are treated the same, whether it's a business or a homeowner. They have equal weighting. Seasonal recreational cabins and agricultural land do not participate in the referendum market value levies. But the house, acre, and garage portion of an ag land do. So this is where things got really interesting this year. This year, the district's estimated referendum market value is 20.75% higher than it was this time last year. What that means is, on average, properties that fall into this category rose by 20.75%. This has a couple of different implications for us. I'll talk about those a little bit later. But we were very much in line with the rest of the state. This was seen throughout the state. And we anticipate probably one more year of a pretty major jump. Just to give you a baseline, most years were in the 3 to 4%. And now this year we're at 20.75%. So when we look at the levies that are distributed over the referendum market value, we have our local optional revenue, which is $724 per pupil. So this year that's a little over $1.6 million. The voter-approved operating levy, and this is the levy that the voters approved a year ago, November, about the same, about $1.6 million. Equity revenue, and this recognizes when districts don't have as large of an operating referendum as some other districts do. We get some equity revenue for that. And then transition revenue, and this goes back several years when we moved to figuring school revenues from one method to another. And so there was transition revenue that has just kind of stayed on the books. It's not a large dollar amount, but it just continues to be there. So the subtotal for the levies that are distributed over the referendum market value are $3,795,680. And then I've talked in the past about the adjustments that happen. And these are usually looking back 1 to 2 prior years, looking at our actual enrollments, and then making adjustments based on those as opposed to what we have as estimated enrollments. The rest of the general fund levy and the community service and debt service levies are spread out over what's called the net tax capacity. And the difference here is that property values are the taxes are distributed disproportionately depending on what kind of property it is. So a homestead property under $500,000 is just, it's a percent of its value, so it's a 1. A commercial property is at 1.5% of its value. Farmland under $1.9 million is actually discounted a little bit, and then it goes to 1% if it's over the $1.9 million. And again, what we're seeing this year is a very large jump in this number, 21.76%. So when you got your proposed property tax statements, you need to look at, everybody always goes to the bottom line. You know, what did my property taxes do? But what you really need to do is look at the top and look at the value of your property to see what that did. I'm just going to give you an example. My property went up 29%, so a little bit higher than the average, and my taxes went up 13%. So my taxes went up at a far less percent than my property value did. And you'll see a little later that that was the case. I looked at another property. The property value went up 7%. Their taxes actually went down about 10%. So just kind of where your individual property was would impact what your taxes did. So the general fund taxes that are distributed on net tax capacity, you'll see operating capital, Q-Comp, the achievement and integration, unemployment insurance, safe schools, the career tech education levy, our long-term facilities maintenance levy, and then we have operating leases. And this is our share of the special ed cooperative and the ice arena. Those are the two things that we have in there. So the subtotal of this portion of the general fund levy is $2,700,465. And then again, we have adjustments for prior years, a negative adjustment of a little over $100,000. So the total here for this portion is $2,590,542. Then moving on to our community service fund, this changes very, very little from year to year. It is based on for the most part, it's based on our population. And since the population of our district, not our student count, but our population, is fairly level from year to year, we don't normally see much change in our community ed levy. So you've got our basic community education levy, our early childhood family education portion of the levy, and something called home visiting, and that's where our staff goes out to homes of birth to school age, and so we levy for a portion of that expense. We had some adjustments of just under $2,000, so the community service portion of our levy is $238,059. And then moving on to the final portion of the levy, the debt service, and we levy for 1.5% over the bond principal and interest payments that we anticipate or that we know will be happening in our fiscal year 2023. And then we have our bond payments, and we also have LTFM, reminder that's long-term facilities maintenance. We've got some debt service there where we issued some debt to get some projects done. You'll see a very large adjustment here, and this is what we talked about when we decided to sell our bonds. We knew we had this large adjustment coming, and so to mitigate or to take advantage, if you want to call it, of that large adjustment, we were able to sell those bonds that we're going to be using for safe and secure schools. And so this subtotal includes the payment on those 2022 bonds that we just sold. So just going through a few things that we like to look at, and then I've got some new information that I think you'll find interesting. So we often look at that school property tax history on a $100,000 residential home. So we know that a home valued at $100,000 in 2016 is probably not still $100,000. And I'm actually going to have a slide that's going to show what that home might have done since 2016. But when we just use a $100,000 home from year to year, you will see that there's been not much change, but in fact this year it is going down, and that's because those tax capacities went up by such a large amount. But if you look at, and this of the top portion shows those referendum market value and the net tax capacity, and that those tax rates went down because of this increase in the values. So here, if you look at a $100,000 house, and let's say it went up at exactly the 21% that the average across the district was. For that home, it goes from $100,000 for pay 22, $121,000 for pay 23. Their taxes go up $38 or a 9.08% change. So their value went up almost 21%, but the school district portion of their property tax went up 9%. And then this shows a graph that shows back in 2016, pay 2016, and I'm sorry, this is relatively small. Hopefully you can see it. So if we had a house valued or a home valued at $100,000 for pay 16, and if we assume a 4% increase every year, which is on average is about right, until we get to this year, and then we've got a 21% increase. So that home, if it just followed that trend, the value of that home has increased 53%. That 50 over those 7 years. The school district portion during that time increased 48%, the school district portion of the levy. So you can see our school district levies have tracked very closely with value improvement. So as your property improves, your school district taxes have gone up by about that same amount. All right, I just want to remind everyone of this because this has been a really big deal for our agricultural property owners, the Ag to School Bond Credit. So this was enacted in 2017 and it affects all of our existing debts, Fund 7, which is the debt service fund, debt levies, except OPEB bonds, which we no longer have. And this is a reduction for our farmers and timber owners. So this is a 70 for the taxes payable in 2023. This has reduced the taxes on those lands by 70%. The revenue comes from state income, sales, and other tax revenue. And so you can see what this has done now over the past few years. Now this is the last year of the increase. There was some agreement in the last legislative session to push this to 85%, but just like so many other things in that session, nothing actually took place. I think that will be a topic of conversation this time around. So as our farmers are looking at their proposed property tax, this is actually a line item on their tax statement that shows what this credit was to their property tax. Before we get to this, I do just want to mention, I don't know if you remember, I'm sure every word I've ever told you sticks in your mind vividly, but when we looked at this back in September, I mentioned that what we're seeing is that some of our state aid, the state aid portion of some of these revenues is going down and the property tax is picking up more of the amount. And as a reminder, all of our revenue from property tax it's a specific dollar amount. It doesn't fluctuate. It is, when we levy, we are levying for a specific dollar amount. What we are seeing, because of our equalization formula, which has not changed for many years, is that as our per pupil, if we take our tax capacity and divide it by the number of pupils, as that dollar amount has gone up, our state aid goes down. So just to give you an idea, back for the Pay 15 levy, that levy, the state picked up 44% of the total amount that these formulas generated in revenue. For this 23, it's 31%. So over the course of time, because that equalization formula has not changed, as our property values go up, the portion of our revenue that the state picks up goes down. Now we're lucky, we're still getting 21% in state aid. Across the state, for the state total, is 5%. So property values have gone up significantly throughout the state, so that for districts that have a lot of property wealth, they're seeing virtually no state aid. It's all levy. So this is the bottom line. The levy that I would ask that you approve is now for an exact dollar amount. And that dollar amount is $9,437,947.69, which does represent a 4.2% increase over last year. So that is my presentation. Are there any questions?
I have a question. So Jennifer, back on your slide where you were showing the 9% increase on a $100,000 home, something like that? Yes.
Yes.
So how does that 9% compare to this 4.2% change?
So overall, our levy is increasing 4.2%. This is only 9% if that $100,000 home increased in value this past year by 21%. So their taxes aren't increasing by 21%, even though their value did, but it is a 9% increase because of their property value increasing. If that home had remained $100,000, their taxes would have gone down. If their home increased by something less than 21%, their taxes would either have stayed the same or potentially gone down. As I mentioned, that one property that the value went up 7%, their taxes actually went down. So it really all just depends on your individual property and how much your property increased. I will tell you, I mean, I'll be honest, I don't normally get a lot of phone calls after the proposed property tax statement comes out. I had 0 phone calls this year. Yes, this part is just informational.
Yes, so there you go. I will call our study session meeting to order. And we've already pledged allegiance, so I think we can forego that. So I will ask for a motion to approve the agenda. So moved by Dennis, seconded by Kim. Any discussion on that? All those in favor, say aye. Aye. Opposed, same sign. Motion carries. Now, we have a couple of action items here relative to the presentation that we just received. Jen is going to present her recommendation for the approval of the 4.2 increase.
Yeah, so my recommendation would be that the board approve the 22 pay 23 levy at the amount of $437,000. Now I've got to get my exact amount back again. And thank you. Thank you. Yeah, I had gone to my slide or my piece of paper that rounded things. Yeah, so $9,437,947.69.
I have a question. So when we did our preliminary approval, it was for the maximum. So is this the maximum that the district can levy for?
Yes.
I do have a comment. Maybe I'll follow that with. I will not be supporting it because I do not support levying at the maximum. Even though we can see property values are growing, that's not money in the bank account for the taxpayers of the community. On the contrary, it's the taxes are growing, and the district is just one piece of the pie. City, county, other items come out for the constituents, and so I will not be supporting at the maximum. I believe there are some areas that we could adjust rather than doing that. Thank you.
A question relative to that. If, as I understand it, if we do not levy at the maximum amount, then that reduces the amount that we get from the state?
Yeah, so it not only reduces the amount that you levy, it also reduces the state aid.
Well, we would be turning down, in a sense, in effect, money that we would receive from the state.
Yeah,
Which
depending
would-
on where you would make a decision to under levy, yes.
Right. Okay, any other questions, comments? All right, hearing none, it has been moved and seconded that we approve the recommended levy amount. All those in favor signify by saying aye. Aye. Opposed?
Aye.
That would be 3, 4 to 1. All right, motion passes. Thank you.
Thank you.
Now, we also have 4.2, the appointment of an assistant principal at the high school. Kathy?
So as I sent on Friday, the high school would like to move ahead with a slightly adjusted model in the administrative area, moving from a principal, associate principal, and 2 deans to a principal, 2 assistant principals, and 1 dean. They are looking, this would give us the opportunity to have a couple of 2 deans who have their administrative licensure in the bargaining unit and then can exercise the authority under that administrative licensure. It would, correct, correct. And I should note that the offer has been extended to Sean Gaston and Christy Kennis. Correct.
All right, any questions, discussion, comments? Okay, it's been moved and seconded to approve the recommendation to make adjustments at the management at high school, principals, deans. All those in favor, signify by saying aye. Aye. Opposed?
Thank you.
Okay, we have one other item before we move into the closed session, the presentation of the school calendar.
Good evening. Thank you, Chair, Directors, Community. So, yeah, you want to actually hand out the proposal here. Actually, we'll be passing out a draft form of the proposed calendar. And this is, before I get to that, I want to thank Jennifer and Kathy, and as well as the rest of the cabinet for all their work. This is, the collaboration is absolutely essential for us to move forward as we focus on our goals and our mission. And also, I want to thank Ashley for being the conduit for this proposal and really bringing in and codifying the 2 opportunities that I bring forward this evening. So, we'll go to the next slide. As we think about our decision-making through the proposed calendars, the calendar will be, in all decisions, we're centered around students. We need to think what is best for our students, then staff and community. And I know the calendar has been a topic of discussion for multiple years. I heard it when I first arrived in Albert Lea as superintendent. But I do believe we need to hear the voices of our students and what is the best opportunity for their learning as we move forward. I did speak with the superintendent student cabinet and just say, what has been your experience through the calendar years, and specifically starting before Labor Day and ending before June. One area that they highlighted multiple times was the opportunity to specifically the high school students, to end their semester before winter break. There was a lot of anxiety that often was carried over winter break to have to come back to take finals and things of that nature. Also, the opportunity for employment. They're first out of, many of our students are first out of the gate for the opportunity for summer employment. So those are two of the areas that they highlighted. And also they said they were ready to go back in August. Their brains were ready. They were raring to go. The staff, I know that, as we think of their scope and sequence, they've been planned out for this calendar for the start of pre-Labor Day with their scope and sequence and backward mapping from winter break. So what you see in front of you are a proposal of a 2-year calendar, a 23-24, 24-25. We heard from the community that consistency, predictability, as well as timeliness. Here it is, it's December 5th, and we're proposing a 2-year calendar. That meets the needs of timeliness, it's predictable, and as well as it's consistent. It essentially mirrors the current calendar that has been here in Albert Lea for several years. It's a pre-Labor Day start. We heard from the community that the August 17th start date for students was early this year. So you do see, you want to move to the, you do see that in the 174 days for high school, 172 for elementary, we're able to start the following week, just a little bit later than the 17th. And you see that we are able to continue with the 2 days, the prior to Labor Day and the post-Labor Day, or the Labor Day time off for families and students. You'll see winter break. This is an interesting piece. Winter break does go up through the 22nd, before the which is the final day before winter break. So where the 25th falls on this calendar year, it does compress winter break. Go to the next slide, Ashley. And then you'll see that staff coming back on Tuesday, giving them staff a day to plan. We heard the staff that was important. And then students coming back on January 3rd. It gives students, the quote, the staff from the committee, it gives a chance for students and staff to ease back into after winter break. And that does take us up through then to May 22nd. And then the commencement would be the May 17th, so a very small amount of time lapsed between commencement and the end of the student day. So this would be the 23-24 draft proposal calendar. The 24-25 is also having students start later than the 17th on the 21st. Now this, ironically, you'll see where the 25th falls, does give the winter break a little bit more of a longer winter break. And again, that is where the 25th falls, bringing students back for those days for a day prior to the 25th or the 24th. It just doesn't make sense through the teacher lens. So then having staff come back on the Thursday and Friday, the 2nd and the 3rd, bring staff back on that Thursday the 2nd, and then students back for one day. It just, for routines for students, it's just hard on that transition for students. So students would come back on the 6th, and that does still continue to get us out before the last day, which would be before Labor Day on May 28th. The conferences remain the same conference style for elementary. That would remain the same, as well as secondary for these 2 years. So essentially, the time for professional development as well as student days off mirror the current calendar we have at this point. Those are the 2 years of proposed calendars.
Could I just ask, on the May 2025, then that would be after Labor Day, correct? I mean, after Memorial Day.
Yes, but
Yeah,
before
okay.
June. My mistake if I said yes. Thank you. And that is, again, that goes back to that winter break. You'll see how that winter break impacts the end of the school year. So these are draft proposals that you have in front of you, and this is the first look. You want to go to the timeline? We met with the calendar committee on the 29th. We bring it to you for the study session for first read tonight. We will present to the general leadership tomorrow. We'll have the learning team, which is the professional development input, on December 6th through the 9th for feedback. We'll continue to talk with the student cabinet just to hear their perspective of a 2-year and any follow-ups. And then we'll have the business meeting on the December 19th for vote. Yes.
I assume that, it's a 2-year proposal this year. Next year will be just a 1 year. We'll go with the second year of this schedule and add the second year. In other words, for one event, we'll be voting on 2 years, but henceforth, it'll just be the second year. We've already established the first year. Does that make sense? Am I coming across here?
Yeah, Chair Scuder, I'll see if I can summarize what I believe I heard is, so this will be it's a 2-year proposal.
Right.
So it will be 2 years, to be the 23, 24, 24, 25. So this time next year, we won't be entertaining a conversation around calendar. We'll be doing a lot of strategic planning, hoping, envisioning out. So we'll really be able to focus so that the calendar won't be sitting out there. Families will know what the calendar is for the following year and be able to plan 2 years out.
All right, so we will every 2 years come up with a 2-year program.
If that fits
If
the
that-
desire of the board, yes. If we want to go back to 1 year, absolutely. We're just trying something new
Well, yeah, but
based on input.
another possibility would be to, always have the second year in place and then just put the next second
Absolutely.
year in place. Okay, any other comments?
I have one. I appreciate the early presentation of these. I think it helps families to plan when we make a decision early. Can you explain how it is that the district can opt for a pre-Labor Day calendar?
Yeah, and that is based on, I can have Jennifer, I believe on the capital improvements, you apply to the state, I believe it's 466. And that is granted by the state. And we have capital projects that do qualify for that.
I would entertain a motion to go into closed session. Moved by Kim. Seconded by Bruce. Any discussion, comments? Okay, all those in favor of moving into a closed session signify by saying aye. Aye. Opposed? Aye. Okay, 4-1. Motion carried.